Hello everybody, this weekend what I'm going to be doing is instead of one longer video that's like 30, 40, however minutes in length to create, going to make different segments and they'll be available on the silver log for viewing with what each one is about. This one is the line chart within the 100-day Fibonacci. So I'll talk about what Fibonacci is and why it's so important within the stock market or charting any type of graph. And Fibonacci is a nature's ratio of 61.8033%. And this is calculated from using the number sequences starting with 0 and 1. I've went over that within other videos. You can do a search for Fibonacci sequence or any type of other ones. But the relevance has stated that when it comes down to those levels that you can calculate, that it's an area that can give you support resistance and it can help show the direction of trend as well. And on my blog, I talk about the sentiments, whether we have something that's very bullish, strongly bullish, or cautiously bullish, neutral, cautiously bearish, and strongly bearish. It's not a guessing game. I don't pick something because I think it can go that way or anything of that nature. It's math. And the math says if you're above this green line, you are strongly bullish. That's a 76.4% retracement on a linear level from the most recent high within the last 100 days and the most recent low within the last 100 days. And in reality, the last 100 days, the low is here. The best one to pick is this one in here, which is pretty much an exact double bottom from this, because that's where the breakout started. But the differentials of the two, it's totally, really, hardly much of a difference at all. So therefore, it has stayed above this high, and that's bullish, extremely bullish. If you're above the green level, this is the 38.2, then you are bullish, but you're cautiously bullish because a breakdown of this line means that you go into neutral territory. This level is neutrality. That's between the 38.2 and the 61.8. And the 61.8, this is the level that must hold for any move to become that of a failed move. If it doesn't hold this level, then it's bearish. The last rally is no good anymore, and there's a good chance that you could easily come down to this level, find support, and then break through because this is cautiously bearish, and this is extremely bearish. And within this chart, we have been extremely bullish since this time frame. A pierce here, a decent amount of time in here, a pierce here, and, well, I don't know if you count that. However, we've been bullish, very bullish, for quite some time within the chart over the last year. And this is the only time we've been extremely bearish. And even cautiously bearish here for a quick period in here and a pierce in here. So the bullishness silver has had has been tremendous. So tremendous that when we got above this 23.6 level, it was roughly at about 19 and a quarter. Hasn't touched any of these levels since, and I was saying on the breakout as I was going to 20, you want to see some support at the 1950 level, and on this chart 1890, 19 looks good, and I was saying at 1950 to find support there. That never happened, but you never got support at this level. Maybe a small pierce here, but nothing much more. And when that happens and you don't get support, you use Fibonacci. Fibonacci to say, well, where's the next level? Next level right now is 21. That's the next level. As silver goes higher, this level increases. It's fairly safe to say that within the next 6 months, a test of this 38.2% would have been done, at least, if not even a breakdown. But if the moves go up to 32, 33, then all of a sudden this goes up to 25, 26, 27. So where it would meet up, it's anyone's guess, as long as it's over 21, of course. And that's why when you have these major breakout moves, the Fibonacci levels, can work as very good support. We'll finish this off by taking a look at where we were and why these levels are so important by going back to February of this year. When we were moving lower, we can see how the resistance, it was showing signs it wanted to go. It was a great shorting opportunity here. But that shorting opportunity became that of a trap. Because it came to this level, didn't find much resistance, and then you're up in here. Oh no, you're cautiously bearish now. But it's not uncommon to go from here to here, up here, and then maybe instead of going higher, it finds support here, goes up, and then boom. And then that would not be a surprise, or that would not have been a surprise either. Maybe fundamentally you may say it was, but as far as the charts are concerned, it wouldn't have been. Which is why you're cautiously bearish, because you don't know if that move lower is going to happen. And if it manages to break this resistance and go higher, well, then the trend is starting to change. And during this rally in here, this was big because now it's a failed move, the sell-off, if it gets above this point. So because it got above the 38.2 here, it didn't mean that it was time to say silver is going big again, at least based on the technicals. Now at this point here, had resistance been successful, you might have had to move back to the support level, back towards here, and then boom, something like that. Once again, that did not happen. And when it got above here, this is where a lot of shorts will get out, in here and in here. That's where the shorts get out, that's where the longs get in. And within this example, resistance where it needs to go to be very strongly bullish. It got above it here, so you had a nice period, but within its consolidation of this move, support at its bullish level, a small pierce in here, and then it broke below it this summer. It broke below it into a neutral state. We went from bullish to neutral, but the neutrality ended here. This is where it became bullish again, roughly at around 1880. And then 1930, it's been strongly bullish ever since.